All right, what's up, y'all? It's your boy Tippy back with another one. Welcome back to the Day Trading Bootcamp. In this episode, we're going to be talking about liquidity. You're going to understand how the market moves to do stop hunts, manipulates retail traders, and how you can trade on the right side of the market, all right? So let's get into it. So what is liquidity? Liquidity is money when it comes to the markets, right? And then trading is found where stop losses are sitting usually, so above old highs, below old lows, and around session highs and session lows. When big players want to enter and exit positions, they need volume, and your stop loss provides that. All right, so stop hunts and sweeps. So this is pretty much how they play out. Price is gonna push past into a previous higher low, then retail traders are gonna think it's a breakout, or just traders in general. Some traders are gonna think it's a breakout, and then three smart money orders get filled, then price reverses in the intended direction. So I showed you guys in the last video when we were talking about fair value gaps, about how London lows, like session lows, are getting swept, and then it digs a little bit deeper and allows larger funds to get their positions and fill their large orders to move the markets. That's what's going on. That's what stop hunts and sweeps are. So smart money often clears one side and then targets the other. That gives you your directional bias, like we spoke about before. When it sweeps one side, sell side, we're expecting it to go to the opposite side, the buy side. All right, so buy side versus sell side liquidity. Buy side liquidity equals stops above resistance areas, so old highs above old highs, and sell side liquidity is stops below support areas, so below old lows. Smart money often clears one side and then targets the other. That gives us, I already told you that. But so next, liquidity and structure is going to be your edge. So the market makes highs and lows. The price takes out a recent low, liquidity sweep. It leaves a fair value gap. Price comes back to the fair value gap, entry with structure, and then your liquidity confluence. So this is just pretty much like a generic breakdown of what you would be looking for, the steps you would be taking whenever you get your liquidity sweep, looking for the fair value gap, waiting for price to pull back, enter with that entry model that we went over, and then you target liquidity. All right, so when to look for liquidity sweeps? During the New York Open. That's why we trade the New York Open, because that's when the most volatile time of the day for these indices. So that's when the market is more than likely going to do these sweeps and try to make the moves that it's going to make, and we want to be a part of that. High impact news events. So whenever we see red folder news within Forex Factory, like I mentioned to y'all could check out the Top Step X has their own little thing where they have their news input on there. So anytime it's like a red folder news, that's a high impact news, you don't want to trade during it. So if something's dropping at 10 a.m., you don't want to be in a trade at least like 2 to 5 minutes before or 2 to 5 minutes after. And then the other areas you're going to look for is going to be session highs and session lows. So the next slide, I'm going to go over that. We can just jump right into it. So the session liquidity times. So for the Asian time, you want to map out the highs and lows. So all of these times, you want to map out the high and low in between these times. So for Asia, it's going to be 8 p.m. to 12 a.m. Eastern Standard Time. That's going to be your Asia range. Then your London range is going to be 2 a.m. to 5 a.m. Eastern Standard Time. Then your New York AM is going to be 9:30 a.m. to 12 Eastern Standard Time, 12 p.m. Eastern Standard Time. And then New York is going to be 1:30 p.m. to 4. The New York PM is going to be 1:30 p.m. to 4 p.m. And you're mapping all of these out from the previous session. Now, I also do have an after lunch trade. So all of these times that you're going to be mapping out are going to be from the previous session time. So the previous day. So when we map these out, we're going to do the Asia session that just passed, the London session that just passed. And then we map out these New York AMs. The New York AM is from yesterday's New York AM session, and then the New York PM is from yesterday's New York PM session. Is not the current session, of course, because you're trading the liquidity from previous sessions. The liquidity from current sessions hasn't been created yet. And like I did tell you, so there's the lunch trade that I do, that's during the session. That's the only one that you trade, like that you map out the high and low during the session, and you can execute that trade during that session. That's the lunch. And the lunch one is going to be from 12 you map out the high and low from 12 to 1 o'clock, and then you look for that trade from at 1:30. So I know we talked about highs and lows. So this is another like little diagram that I wanted to explain to you guys of kind of how like the markets move. So remember I told you the market's gonna, when we're in a bullish trend and we're going up, the market's gonna make a higher high, higher low, higher high, higher low, high, and then higher low, right? So another way you could look at it, all of these points are areas of liquidity. So this right here is external range liquidity because it's in high, right? And it's on the outside of the market structure because that's the high, right? So old highs are going to be your external range liquidity. Your internal range liquidity is going to be like the fair value gaps that we're looking to get into. So that's why you see the IRL. So internal range liquidity. So that's another way to think about how the markets move instead of thinking of higher high, higher low. It's going to external range liquidity to internal range liquidity, then external range liquidity to internal range, and you know what I'm saying. So, and then if you look right here, I did the same thing for like when we're selling off or something. It's the same idea, but right here. So like I said, we create the low, that's our external range liquidity now. And then we pull back, that's our internal range. Then we go and take that external range. After we take external range, we go back into internal range, which is that fair value gap, like I mentioned, and then external range again. So that's just another way to look at liquidity, like within the actual, like when you're in your trades and everything. Cause you know, we're looking at liquidity from previous sessions. So you can kind of look at liquidity that's forming as we're trading. You're like, okay, bet, like, we have this internal range liquidity, that fair value gap that was formed. So we expect price to pull back into there. Then when price gets into there, we know we can expect it to at least take this external range so we can target that, take our first, you know, bit of money off the table right there and hold some more for more if there's more movement. But you just got to see how the candles are praying and what price action is looking like that day and just kind of execute off of that. But that's just a little nugget right there. Here's a tip whenever you're dealing with liquidity. So you want to ask yourself, is price moving towards liquidity or away from it? And the second question you want to ask is, has liquidity already been swept? If liquidity has just been cleared, that's often when it's safe to enter, not before liquidity has been swept. So you want to see, is price going towards the liquidity you mapped out, and has it swept it already? If it hasn't swept it, there's no trade to be placed yet. All right. So again, this was just about liquidity. Like, I know I had a lot of people asking me about it. The next video, we're going to be doing a top-down analysis so you can kind of see me put it all together, put my lines up, map my liquidity out, and how I'm looking to execute my trades for the next day. And in the next episode, it was supposed to be fair value gaps and imbalances, but this video is going to be uploaded a little bit later, but I'll try to see if I could squeeze it in before in the playlist, so you guys, for all the new people that are coming in, you can kind of you won't miss a beat for real. But yeah, man, I'll catch you guys in the morning. We'll be at it I'll be on around 9:15. Yeah, let's see if we can make some money.